Hello, welcome to McBoss Capital channel. My name is Michael Chu. This is a market recap video for December 20th, 2024. We have a pretty rough week in overall. You can see this is a weekly chart of the Nasdaq. We have come a long way. We had 14 weeks rally here with a couple of down weeks. And then right now we just experienced a down week right now. It's a pretty severe down week, down almost 2% here. You can see it came pretty close to the 10-week moving average. It hasn't really come down to it yet, but that's something we'll be watching in coming week or so and see whether we will come back and test that 10-week moving average. So right now, this rally has gone on for quite a while now. Like since the August 5th low here, we have slowly come back up, and it's been yeah, it's about 14 to 17 weeks depending where you count from. And right now we had this huge one-day down day because of the Fed meeting that they lower expectation for rate cut for next year 2025, and it was just tremendous selling that day. And even though if you go into intraday, you can see it started selling off like as soon as the minutes got out, and then by the time Fed speak, it went down even further. It was just a lot of selling. There was like not much pickup at all. And then the next day, you can see it didn't have much power. It gap up, but it really came back down. And then on Friday, we have a gap down, but then it kind of rise back up. So we have the PCE inflation report that was better than expected. So it rise pretty nicely, and throughout the rest of the day, it kind of give back some of it, but at least it's more than half of the gains here from the intraday. So as it stands right now, Friday, we try to come back to the 10-day moving average, which is the green line. But it actually fell back by the end of day to the 21-day moving average, which is the pink line. So right now there is some support around this 21 day because it came back. And we also like found support at the low here. The question now is, as the 10-day moving average is starting to slope down, is it going to find resistance here? So Monday will be a very key day. What it do? If it start to find resistance there, then I expect it to come back down. Not only test this low, but probably will test the red line here, which is the 50-day moving average. So I just want to say, even though the index here for Nasdaq, which is a weighted index, doesn't seem like it has corrected a lot, but a lot of growth stocks have started to correct a lot more than the index. And this is something, if you follow IBD Investors Business Daily, they teach that generally growth stocks especially will drop 2 to 3 times the average index will drop. So if Nasdaq drop 5%, you expect growth stocks to drop anywhere from 10 to 15%. If it goes down to 10%, we expect it to go like anywhere from 20 to 30%. And right now, it's a few percent off the top, so it's not too bad yet. Again, this was a much stronger index recently because of the mega cap, which we'll talk more at the end of this video. So we'll see if they will break down or further, or whether it can hold at this level right here. It will be very important for this index. For S&P 500, it looks a little bit more bleak on the weekly picture because we are on the second week down, and you can see it touches the red line. That's where it closed on Friday. So that's also not too good of a sign, because the next level down is really the 200-day moving average, or like the 40-week moving average right here on the black line. So there's a lot of room for it to drop if it does break that level. So we had to be more cautious here. For both Nasdaq and S&P, we see tremendous volume on Friday because of the quadruple witching that happened for options futures expiration. So here on the daily chart, we broke 10, 21-day moving average, and then we actually also break 50-day moving average. So Thursday it couldn't bounce back, but Friday you can see it found support at this level right here. Again, it's very typical in a downtrend for stocks or index even in this case to bounce back to their short-term moving average, which is this 10 and 21 day right now converging at this slope rate. So it'd be very important for it to pass through that downtrend line and find support there. You know, for example, if Monday it opens up higher, doesn't mean it's going to close higher. So we have to be cautious. Open up a little bit and then it fall back down by the end of the day. So this line is very important since it's now kind of started a downtrend. Again, we see huge volume coming in on the quadruple witching. It's really hard to tell what that means, but the following days we should see how it react around this line. The other thing to think about is like it's possible that because we went through such a heavy selling here in a couple of days, um, it's possible that we have been oversold short term. So again, we may see more of a technical bounce, and then it might even come back to the previous high, or fell a little bit short of it before it resume its downtrend. So those are possibilities. We'll see. Volume is going to start to dry up in the coming week because there's only 6 sessions left. So it's very easy to manipulate the stocks and even the market in general. So I wouldn't read too much into it. I would be very cautious on any uptick here. Again, Friday's rebound, even though it seems strong, but it actually didn't close that strong, right? It actually fell back down as we saw in the intraday chart. So, but overall, it's still healthy right now for this bounce. It's only one day. We can't really say too much about it. You can see here we draw the high and the lows here. We roughly back at the halfway level of that range. So again, it's just too early to say where this will head. But I assume that it'll be uh, maybe hopefully the Fed has really put a dovish on the market, and it was what they call a hawkish raise on the interest rate, which means I mean cut on the interest rate, even though they cut, but they're really hawkish about the economy, meaning the economy is strong and stable, but yet inflation is not coming down as fast. So they want to hold the rate right here to see further progress on inflation. And but Friday we did get that good number from PCA, hence it was able to rebound. So this is from the Investor Business Daily newspaper. Inflation relief, consumers solid. The core PCE rose just 0.1%. So right here, 0.1% versus October, and held a 2.8% versus a year earlier. So you can see this number hasn't gone down much. It's kind of flattened right here around this level. So that's the Fed wants to see more progress towards the 2%, but we haven't got there. And then we have retail sales seems okay, doing okay right now. So this is the equal weight S&P 500. You can see this one has corrected quite a bit. I don't know how much in total, but you can see from the chart. And this is the more of the behavior I see in most stocks right now. Majority of stocks, they were pulling back and pulling back, and then here on Wednesday we basically see an acceleration of the downturn, and that's what we saw in many stocks behind the scene here. So this again, equal weight represent more of the general stocks in that basket, which is like 493 stocks versus the 7 stocks that are mega cap. And looking at the green line, the 10-day moving average, you see we are just right here, and we still haven't come back to it yet. So as this start to slope down, we want to see, again, I anticipate a little bit more bounce and test that 10-day to see how it react around the 10-day. It's possible that it will get resistance at that level as the 10-day comes down before it kind of comes back down. Again, if it does fail on testing the resistance, probably the level here, it will be probably testing the 200-day line here, which is the black line. Here's the equal weight Nasdaq 100. Here you notice that very similar pattern. We have this slight slope downward pullback. Then we accelerate because of Wednesday's downturn. And you can see it went almost close to the black line right here and tested it. Again, this 10-day slope is going to start to slope down. And we'll see how it reacts to that 10-day. Right now it's right here, but you can see there's still some gap here. If it fills that gap and get reversal from there, that will be pretty bad. Then we will probably test it 200-day moving average as well. Looking at the advanced decline line for New York Stock Exchange, we see that it bottomed on Thursday right here. So it's been going down pretty hard. And then we have Friday, a day of bounce. Then here, same thing with Nasdaq. You can see it's hitting new lows, like even before Wednesday, and then Wednesday dropped much further down. So a lot of stocks are down versus up. But on Friday was obviously 2,000 stocks versus 1,000 stocks here that are up versus down. So there's some relief on Friday. Like again, it's more of a technical relief um, because we just sold off so fast, and now we have some buyers come back in to try to pick the bottom here. The other big problem we've been seeing again before this Wednesday's drop was that, Dow was going down like 8 or 9 sessions in a row, and then we hit the 10 session down big, and you can see we broke all this red line right here, and right now the 10-day is starting to slope down again. We may face resistance around there. I'm not sure if it come close to it right here, but it looks like it found some resistance there on Friday as well, so it gave back some. Unfortunately, Russell again really gave up its 10 the red line right here, and not only gave it up, but you can see how much further it dropped. It was the biggest loss of all the index on Wednesday. Like I think it was over 4% drop. So it was unfortunate. The small caps just having lots of trouble right now. And you can see even Friday's rebound is kind of weak, right, compared to other index. It gave back quite a bit, like more than 1/3. In terms of the range right here, this is the Wednesday's high, and this is the Friday's low. It hasn't even come back to close to the middle as well. So that's another weak sign of this index. So again, the Fed not cutting as much next year could be not good news for a lot of small caps as they're dependent on a lot of borrowing capital, which they pay higher interest rate. Looking at the 10-year yield, we see a huge jump on Wednesday after the Fed announcement. It pretty much went back to 4.5% level. Then we hit intraday at 4.59 the next day before pulling back. Again, the problem here is look at Friday. It just didn't give up much. It just doesn't want to. As this 10 days is going to catch up, this looks like a very strong uptrend right now. This could create a problem for the bond market and so forth. Who knows how far this will go, but right now this is a very sharp uptrend. So as more bonds sell off, we could see equity also get pulled out as well because it's a risk-off environment. So we have to be cautious going into the new year. We have 6 days of sessions left. Most likely it's going to be very choppy this 6 days, I believe. And then the new year comes, we might see some heavy sell-off in the first week or so before we see some stability, and then see how the Trump will take office in the new year by the I think 24th or 25th. I can't remember the exact date. So that roughly around the third or fourth week, right? So we'll see how this all play out going into the new year. The reward risk ratio is kind of skewed more towards the risk side now because so many stocks are extended. Not many stocks are breaking out basis, so it's a very hard environment to have a more leverage on the reward side versus the risk side. So right now, you're really taking a lot of risks versus the reward potential. Here we have the U.S. dollar, very correlated to the yield as well. Look how it has also climbed very fast, and Friday it did pull back a little bit. So this is also possibly one reason why Dow is acting not as strong, because most of those companies are international and they may get hurt on the dollar and so forth. Oil price is quite stable. It hasn't moved much. It seems to be this moving average is all converged right now. The short-term 10, 21-day, 50-day is around this area. It looks like it's just not doing much. Probably when Trump take office, we will see what based on his policies, how the market is going to react. Whether he obviously want oil price to go down, so this could happen. So let's see how that goes. For gold, you can see it has now starting to show some weakness as it's starting to the 10-day is starting to come down a little bit further than before. So and we also have a new recent low right here. So this is the 236, the most recent low. And so if we close that low, that may spell more trouble for gold stocks. So this is the IBP 50 growth index here. You can see the downtrend is quite clear right now. So again, very similar. A lot of this will be testing their short-term moving average this week. So I'm very patient watching this level here. You know, it goes for all the index as well. For them to have a higher chance of success of another rally, we need it to come back not only above that short downtrend line, but we want it to stick above it and then take off, right? That's really what we want to see here. But if it kind of climb above it and by the end of the day it weakens and even close at the bottom of the range and not surpass this downtrend line, then we could end up be in a more prolonged downtrend here. So let's be a little bit cautious about that. So this is the grayscale Bitcoin. Again, Wednesday, we see a big reverse, big drop here on Bitcoin in general. Now it's continued to come down. And look at Friday, there was no power whatsoever. It just couldn't move much. So this is now, because this is a very strong representative of growth story. It could be a problem for the market as well. So we'll have to see how correlated Bitcoin is towards the other growth stocks. But let's see how that goes. Next week we have consumer confidence reading on Monday, durable orders and new home sales data on Tuesday, initial jobless claim on Thursday, and retail wholesale inventories on Friday. So we'll go through all the spider sectors pretty quickly here. First, we have technology XLK. You can see it's at the short-term 10-day moving average. Again, we're testing this downtrend right now. We'll see if we can climb back above. Next, we have XLC again in a downtrend. We'll see how it reacts around this downtrend line. On the retail, very similar again. They all have very similar pattern right now, all on a downtrend. Consumer staples is a little bit weaker. You can see it has accelerated in dropping recently in the last few sessions. Consumer discretionary has also topped right here, and then now it's starting to come back. Look at Friday's action is not very good. Very similar to Nasdaq, where it just ends at the 21-day right here. So looking at the industrials, it performed pretty bad so far. It started going down this slope. Now it has accelerated. The utilities are starting to find a little bit of support here. So it hasn't made a bought low in 3 days now, so that might be okay. We'll see how that goes as it comes back towards that downtrend line. The health sector continues to look pretty weak. You can see all these different legs. It has suffered a pretty big correction so far, and obviously some stocks have also really get really their butt kicked in a sense. Here we see Friday also reversed from the high there. This is not a good sign as a 10-day moving average slope down. So yeah, picking the bottom is very hard right now just because this is still looking quite weak. I'll just quickly jump to Lily. Look at this. There was a news about Novartis MEO. Their obesity drug not very performing very well. So you can see the huge gap down here, huge volume. This has corrected a lot, 42.6%, and Lily is about 21%. So we'll wait for it to come back above this longer term moving average, which is the 50-day or 10 week. So again, we found reversal here. That's never a good sign, especially in a downtrend. Energy is really getting probably the most beating besides health. See this down slope here, quite significant. So the financials again has been pulling back, as well more recently, and it seems to have found some bottom here, at least for 2 days, more than 2 days now. It hasn't hit a new low. So again, we're coming towards this trend line, downtrend line. So we want to see how it reacts, whether we can surpass this. Looking at the smaller subsector like regional banking, we are also have a really steeper slope now. So again, we'll see how it reacts as it comes back up. And then looking at the bigger bank group, very similar chart. And looking at the real estate, it's also pretty sharp downturn. We are now at the 200 day. The bounce on Friday looks kind of weak because it just barely passed the previous day's close. So this is also not good news. So related to the real estate, we have the home builders. This is definitely suffering huge losses right now. It has accelerated. Again, the interest rate is very interest rate sensitive sector. Some of the stocks that have been hit hard include DR Horton. Look at this acceleration and drop on Wednesday, Thursday here, and look at the bounce on Friday. This is quite weak, even though there's so much volume coming in because of the quadruple reaching day, but the percentage gain was only 1.7%. Yeah. So looking at semiconductor group, it's holding on to this, bottoms here. If we do fail this level, it might be more severe correction. So we'll have to watch out for that. Again, Friday's bounce, I mean, it looks okay here, but I just find that given the way it has gyrated around this zone here, it's really weak because we can barely, trade in the upper range here, right? We've been trading mostly in the lower range here, which is not a good sign because it means that we keep wanting to test these lows here. If it tests this low and it breaks it, we could see huge sell off on that sense. Looking at Nvidia, also very disappointing. You can see here, despite Thursday and Friday bounce, we really didn't get much power. And on the day that was up, Thursday, the first day that was up, look at that volume. It's much lower than the few previous days that was down days. So AMD here is still on the downtrend. The Taiwan semiconductor here, also looking very weak. You can see here for since Wednesday's to sell off, it hasn't really recovered much. It's not even in the middle area. Finally, we have the software sector. This is also in a downtrend. It has come to the 50-day, found support right here. So now it's now stuck between 21 and 50 day. Let's see how it reacts on this level here. Uh, Microsoft also looking very weak. Look at how it couldn't gain even on Friday. Meta, very similar story. Look at it. It makes actually even newer low on Friday. For Amazon, on Friday, look at even though it did close at the top of the range, but it really didn't gain much, like 0.7%. So that's also not a very strong um, rebound so far. So Google is trying to come back up as well. Looks a little bit better since it was able to close a little bit higher than Thursday. Apple is really surprising. Look at Friday. It even though it make a newer low, which is also weird. So here on the gap open, it actually gapped down quite a bit, and then it recovers very significantly and actually make a new high. So this is a really good chart right now because we found support and was able to close at a higher high. This is very strong. Maybe there's the Christmas season and so forth. Maybe help Apple. Maybe some anticipation of better sales here. So Tesla have a very significant run right here. In a very short time frame. I think it was roughly around here the breakout zone, roughly 360. It went as high as roughly 480. So that was a pretty quick gain in a very short time, like 120. Yeah, it's like 30%, over 30% gain here in just a short time. And of course, this Wednesday we had a huge drop here, 8%, and then it continued to give up more. Again, this is now profit taking time, and so volume is pretty high as well. So right now it's sitting at the 10-day. We'll see if it can find support. If it doesn't, obviously we'll maybe find at 21, and then we have also the 50-day here. So thank you all for watching this video. Please follow and subscribe if you like. We will have the next video out talking about the growth stock list that I'm looking at. Just a quick peek around that. Most stocks are still in downtrend, more than last week, previous week. So, but there is some stocks that are holding up pretty strong, and some potential opportunities that are bouncing back. So we'll take a look at those as well. Thank you all.